major news for those who are looking to buy a new home. As of November 15th, mortgage giant Fannie Mae has scrapped its minimum credit score requirement of 620. Now, this move could potentially allow more Americans to qualify for loans from lenders who review borrower information through their current underwriting systems. This expansion also gives new opportunities to borrowers with so-called thin credit files or non-traditional credit histories. Here with us now is Bobbi Rebell, a certified financial planner and the consumer finance expert at badcredit.org. Bobbi, welcome. Good morning.
Thank you for having me.
We were talking about this yesterday. This is pretty big news for those who have always dreamed of being a homeowner but just misqualifying through Fannie Mae. What is changing here? What does this mean for so many consumers out there?
Well, you're absolutely right. This is a big deal because a floor has been removed. So it used to be sort of an up or down vote. You're in or you're out, 620, that is it. The difference here is now they're going to take a more holistic approach, and that's going to be more inclusive, as you mentioned, to people who maybe have a thin credit file, who maybe wouldn't qualify with just the hard stop at 620. Now they're going to look at other factors. They might have to have a larger down payment. They might have to have more cash reserves. It's not necessarily, this is important though, it's not necessarily a change in the underwriting standards. You still have to be a good risk for the lenders.
Yeah, I was wondering about that. I'm sure it's a lot more than just the credit score changing. What kind of impact could this decision have on the housing market, Bobbi?
It could have a huge impact because, you know, we've got such a tough time for people who want to become new homeowners. And this is something that can really open up a lot of opportunity for them to get the financing that they need to get into that first home. People that don't have a long credit history, right? It just might be as simple as they haven't been alive that many years to have developed a long history of having credit and having that bigger file to look at, right? So this is going to allow them, if they have other resources, if they're good employees, if they pay their bills on time, different things. It opens up the door to borrowers with lower credit scores. And you don't always have a low credit score because you did something wrong. It just may be a question of the circumstances, the things that you've been doing in life. Maybe you've been a student. Maybe you've just been doing other things that haven't necessarily focused on building that one super important, I don't want to call it a little number, that big number. It's important, but maybe that just hasn't been something that you've been able to do.
Yeah, a lot of people have thin files, as we said. They just don't have credit cards. What does this mean for potential home buyers?
So it is good news because it allows you to present a bigger picture of what you bring to the table as a risk to the lenders. At the end of the day, Hena, what it really comes down to is, are you going to pay this money back on time and as you are on schedule and all those things? So are you a good risk for banks? So they're going to be looking at different things. They might be looking at your credit history. They might be looking, for example, at your payment patterns. Do you pay your bills on time? Your debt to income ratio is something also that people can focus on, making sure that that is, you know, looks good, that you don't have so much debt relative to how much you earn. It also means that they can look at things like non-traditional credit references, documentation. You know, are you employed? Does your employer have something to say that you're going to be a good credit risk? And I love this last thing on this graphic here, home buyer education. This is something that is so essential because people think that, you know, owning a home, you just buy the home and then, you know, that's sort of the end of the story. There's so much that goes on when you own a home in terms of insurance, in terms of maintenance, in terms of maybe you might have HOA, homeowners association dues, maintenance of the exterior of your home, things that go into it that people don't think about till they're in the home. And so homebuyer education is something that I think could really be an asset to many potential home buyers.
Yeah, speaking of home buyer education, what are some tips for people wanting to make themselves the best candidate for getting a loan?
Yeah, make sure you are first and foremost paying all of your bills on time. It's not a bad thing to try to boost that credit score. It's only going to help you lower those credit card balances. That is one way to get to a higher credit card score. We mentioned your debt to income ratio. That is also something that you could control. Boost your savings. The more assets you have in the bank, and I know this is a little bit counterintuitive because you might say, well, I wouldn't need to borrow so much money if I had the money. But you want to have a lot of assets in in place, because what you don't realize, as we mentioned, is that once you own the home, there's going to be a lot of expenses that you're going to incur, and the banks know that. So they want to see how much of a backstop you have when you get into the home, so you don't have trouble if you have to replace the windows, if you have to replace the roof, if maybe your insurance is a little bit higher than you would like it to be, which is always the case, right? And then, of course, check for errors on your credit report, because that is the easy, well, I don't want to say it's easy to fix, but that is something that can be fixed and can boost your credit score. You never know. Mistakes are made.
Thank you for watching. Subscribe below and download our NewsNation app right now on your phone, and you will get fact-based, unbiased news for all Americans.